大家好，我来自英国，我叫 Kai.
Going from raising 200,000, how much money have you been able to raise this year?
20 mil.
For those people that are raising money in the UK versus raising money in other markets, what do the rates look like?
People looking for anything between, which is mind boggling. It's so easy to raise money.
What is the sort of scale of projects that you've worked over the last 6 years?
We've looked at a 50 unit scheme. Now we've got stuff in planning, about 100 units for co-living. We're looking at 120 as well, that's central Birmingham.
As a black man going out there to do business, how's that been?
I was hoping you asked me that question. One of my biggest clients out there, he said to me once,
PBK podcast is sponsored by Faraway Pizza, the fastest growing pizza company in the UK. With over 160 stores, you can definitely find one near you. If you want a slice of their flavoursome pizza, then you can use our discount code PBK20 at faraway.co.uk to get 20% off. Once again, PBK20 at faraway.co.uk to get 20% off.
Welcome back to another episode of the PBK podcast. I must say so myself, but I think it is the favorite property podcast that's out on YouTube right now. Let me know in the comments if you agree or disagree. Each and every week, we bring you a fantastic guest. And today I have to my right-hand side, Kai, how you doing? You okay?
yeah, very well, thank you. Good to see you.
Good to see you again. We don't get to catch up as much as we try to. We're kind of people that when we see each other, we say, oh, we need to catch up soon. And then, well, we managed to get you down, which I'm happy about. So you are the director of the name of your company again, Trinity?
Yeah, Trinity.
Trinity. And just for those people that are maybe not as familiar with you, what's your background? What does Trinity do?
Right, so I'm based in the West Midlands, and so the company is called Trinity because we focus on the three things: assets, profit, income. My background, typical, started my career as a consultant, and I just got bored. So we decided to go into development straight away. I started my first development about 7-8 years ago. And I realized there was a gap in the market. So obviously being based in the Birmingham region, we realized, the young professional segment were underserved. So we thought actually I should fill in that void. So we started by developing co-living schemes, BTR, build to rent schemes. And, that's pretty much it. So we tend to raise money in the Far East, Asia, Singapore, and deploy the capital through our investments, but also provide debt to other developers in the West Midlands.
Nice. So in terms of that first scheme you did starting out, what did that first scheme look like?
So it was my own personal one. So I built about 20 rooms, split across 3 properties, HMO. At the time, I was looking for the fastest way to replace my income. And then over time, we kind of scaled from there.
Okay. And in terms of the model now, is it solely shared accommodation in terms of the young professionals, or do you do any self-contained units? What have you kind of pivoted into?
So it's kind of split between 3 segments. So we do houses, so we will build like an estate, so 10 units minimum. And on the co-living sides, we've got a few things in our pipeline we're working on, stuff that we're currently building now. So it's a range between minimum 30-40 units. And then finally, we would go down the build to rent, so PD schemes, so conversion schemes in the West Midlands.
Nice. And when you say West Midlands, whereabouts specifically are you operating?
So we've kind of broadened our horizon because you can imagine trying to get really good stock, it takes time and depends on the strategy. So cities like Birmingham, not much so Coventry, but Warwick, Black Country, and also looking at the North Warwickshire region.
Okay, nice. In terms of an area, is that where you're from? Like, what was the rationale behind the area and focus?
It's a good question. I think at the time, so I was born in Birmingham, and over the years, I kind of seen we're pretty much way behind to our colleagues like Manchester, the bigger cities, obviously not even London, so places like Liverpool. And we realised, there was a surge in the plan we had for Birmingham, so the region as a whole. So Birmingham, obviously, if you talk about the West Midlands, you have to start from Birmingham. So what kind of happened for me was looking at the 2030, now 2040 plan, we saw the plan for the entire region, the West Midlands, connecting the West Midlands to London. And by doing so, you can't ignore the smaller towns or cities like Wolverhampton, Coventry, the Black Country significantly. So we thought actually the way to go is to have a presence across the West Midlands. It gives a bit more scope. we can deploy some of the key schemes that we're looking at, the ones I mentioned. So again, we realized, even Birmingham will be that big driver to bring in a lot of FDI, foreign direct investment, but we felt the knock-on effect we have to obviously look at places like, Wolverhampton, your Black Countries, your Coventries, Wolverhampton, what have you.
Mm-hmm. And with that being the focus of sort of the area that you're operating in, what is the sort of scale of projects that you've worked on over the last 6 years?
So the biggest scale we've looked at a 50-unit scheme. Now we've got stuff in planning about 100 units for co-living. We're looking at 120 as well. That's central Birmingham. We also got delivered on a scheme which is about 40 apartments. That's in the Black Country. And then we've got another one about 30 units. Again, these are schemes that we're looking at the mid to long term. So long term are the ones I talked about, which they're in the 3 digits units that we're trying to obviously get planning for.
Nice. And obviously, I guess for a lot of people thinking about really getting into development, you're talking about massive numbers. And one of the ways that or probably the most significant way that you've been able to scale is by raising capital, but primarily raising capital in the Far East. Am I right in saying that?
No, absolutely. So I think, Kat's a very good question. So I took a step back at time and I realized actually, if you look at the 4 ways to add value in property development, the first one is planning, build, finance, and do structure. So I focused on the last 2, which is finance and do structure. I realized the biggest values is raising the money and also do structure. How do you get, so many dues out there. How do you structure the deal to get, achieve the outcome that you set out from the get-go? And I realized, if you can raise the money and find the scheme, the first 2 is so easy to obviously accomplish. So the focus was understand how best we can raise money and deploy the capital in the UK. So I think for me, the biggest value for me was understanding how to raise money effectively, understanding the deal, and deploying that capital within the UK.
So how did you, because it sounds like, one of these things that people say, oh yeah, you just go and raise money from X location. But talk me through the actual first process of the first onboarding an investor or someone to actually get them to sign and say, right, I'm signed up, here's the money.
It's a very good question. So I'll tell you why I say it's a very good question, because again, it's not easy raising money. And I realized at the time I was raising money in the UK, my background was obviously consultancy. I knew so many consultants in the city, i.e. London, and across the country. So again, it's really good people. They got a lot of liquidity, but again, the money that I was raising wasn't significant enough. Anyways, long and short of the story, I went to this property meetup. This was many years ago, about 7 years ago. And I came across 2 investors from Singapore, and they were looking to scale. They were selling so much money and they wanted to deploy that capital in the UK, but they heard about Birmingham. They came across the 2031 plan at the time. Now it's 2040. And I realized that they wanted to have a presence in the West Midlands. So they came to this property network and I bumped into them. In fact, I saw the guy, I thought was a refugee, and I didn't want to talk to him, but anyway, we got talking, and I said to him, right, okay, what are you looking for? It's like, I'm just trying to obviously connect with people in the West Midlands. I wanted to kind of really grow my presence in Birmingham. And then I took him down to a couple of HMs I've seen at the time. And I like what he saw, and he said, I've got 200K, can I invest with you, X, Y, Z? And the rest was history. Looking back at that time, he wanted to work with me on a small HMO to kind of see how it worked, get to know him a bit more, because his plan was to go down, invest in the region of 7-8 figures within the UK. Not just myself, he has all the people like me globally, also in the UK. So that experience kind of really helped me understand, it's about having value to offer people. And number 2, once you deliver that value, there's that trust, and then you can scale from there.
So going from raising 200,000, what's say for example, I was to say this year, how much money have you been able to raise this year?
So our first, this year we've raised 20 mil. Now with capital calls, because the way it works, you get committed capital. People commit to the fund you're raising. So we're looking to raise 15 mil, but we increased it to 20. Now we've called half of it, so 10 million so far it's now in the UK. And we're looking to capital call the rest in the next quarter of next year. And that's the sort of numbers we're looking at. Now, we've kind of reduced it because initially we could have raised 30 mil. But I think it's an obligation when you raise money, you have to deliver. So again, we are calling the capital slowly.
And comparatively, for those people that are raising money in the UK versus raising money in other markets, what do the rates look like and how do they compare?
To be honest, it amazes me when I raise money out there. The raise we've done, people are looking for anything between 4 and 6%, which is mind-boggling. In fact, we raised some of our bridge finance from Singapore because the cost of capital, as you well know, Kaz, the cost of capital is significant, very high in the UK. You're looking about 13-14% a year. So half of that is what we're paying out in the Far East. So typically, the highest cost of capital out there, and we want to be competitive, is about 8%.
Okay, which is still very competitive when you compare it to the UK market. But I think, look, for a lot of people, it's like, okay, it sounds good, but like they're like, what? So what should I do? Just jump on the next flight to Singapore and just start saying, I'm a property developer, I'm raising money. Like, talk to me about the process and the intricacies of how you were able to set up something where you can raise £20 million over a calendar year.
Right, okay. So I'll just go back to my first encounter with the guy I mentioned from Singapore. I think it was, first of all, starting small, showing you can deliver. Now, the person I actually on board as an investor is a high net worth individual, and you tend to find they tend to have a network. So I think it was about making them money first, starting really small and delivering, and also having a framework in place to onboard them. Because again, there's some regs and the things you have to do. But anyways, in terms of my own personal experience to get to that sort of 20 mil, once you deliver one investor, no matter how small that scheme is, they tend to introduce you to other investors. That's the first thing. Second thing is, I've done a lot of interviews out there. When I actually go out there, I would jump on the podcast or maybe go to a fundraising event. They have so many of them. It's like dating on steroids. and the reason I say that is because you are meeting tons and tons of investors out there. You're the prize. In the UK, the investors are the prize.
Yeah,
I've never been in events. I usually go to events every year, and it just amazes me when you get to this event, you have investors run up to you to say, "What have you got?"
Yeah,
and you tell them what you've got, and they ask you, "Where can I sign?" So it's so easy to raise money, and there's so many events out there in Hong Kong, Singapore. They have them because there's so much liquidity out there. It's unreal. So again, to recap, deliver first if you find our first investor. Secondly, you want to go on podcasts, you want to go to property events, there's so many out there. And be ready, because again, the way to do business out there is so different. Say, for example, Kazy, you go out there, I meet an investor. The first thing they'll say to you is, let's meet up for a meeting. The meetings there are not your typical office. You go for a dinner. And if you have 4 meetings, it's 4 dinners, and they give the biggest portion. So you have to be ready to be able to eat and to be able to obviously close out there. And also from a cultural perspective, it's so different. So you have to kind of really adapt your style. It's not typical UK. You have to kind of really build that relationship and also have something of value to offer.
How do you think like your ability to build relationships with people from different backgrounds culturally, do you think that was something you were always good at? Do you think it was something you learned working as a consultant? Where do you think it came from?
No, 100%. I think it's come from my consultancy days. But having said that, I think it's about delivering value, because as a consultant, you're there for a very short time and they pay you a lot of money. They pay you between, 500 to about £2,000 a day. So you have to deliver. And you're talking to CEOs, you're talking to CEOs, CMOs and what have you. So you're there for a short time and they have to see the case study of why they're paying you X amount of dollars or pounds per day. So again, I think that mindset of delivering value first and then the rest will follow. I think that's the very, very first thing. But at the same time, because I worked in different time zones, different countries, different regions in the UK, how to kind of really adapt your style to understand the culture. And it's funny you should say that, because for every time I've worked in a different country, I've taken the time out to either learn the language or maybe say something, or maybe try and obviously get immersed in the culture. And I think that's really, really helped. So those 2 things in terms of showing what you're paying for, giving them what they're paying for. And the second thing is adjusting to the culture and embracing the culture and also delivering value for them.
Nice. I think when we talk about like scaling, so going from doing residential homes that people really have an understanding of, they might have lived in a house share at uni and understand the value, or currently live in their own house with their parents maybe. people understand it. But then when you sort of start to go scale, and like you're looking at now, you're doing co-living schemes where there's a lot more complexity, whether that be in relation to fire safety, the communal areas, and fire risk assessments, all these different sort of things that people have to consider. Where did you learn or feel you were confident enough to deliver larger schemes quite early on in your journey?
I think for starters, it's the passion I have for the Midlands. I feel, I don't know if you're aware, but the Midlands has the youngest population in Europe.
And I did not know that.
No, it's a fact. It's a gap that we have. So we don't have enough to cater. Because look at it this way. It's like, if you look at the education system, once you get past college, you go to university. After university, where does people go? It's so difficult to find quality accommodation. And I don't know how well you know the West Midlands or Birmingham specifically. Most of the universities are in the town centre. So once they finish university, or whilst they're at university, they're used to that city life. They want to remain in the city. And the problem with your typical buy-to-let flats, apartments, they're quite pricey, but students are used to that all-inclusive. So again, I feel that's the gap, and it's the passion, first of all. But secondly, there's some really, really good network. I'm sure you met some of them been here. Anthony Leville, he's a really, really good guy, really good friend. Trying to see what works, what doesn't work, see how people position themselves. You're getting the banks coming in, you're having private equity funds coming to the Birmingham region, but it's your gaps about understanding those gaps, but again, talking to different people within the industry and how best I can deliver my own scheme. But as I said, going back to the 4 values, once you can raise, the build, I think you can pay for. You can pay people to do it for you.
You can buy in the expertise.
You can buy in the expertise 100%. So again, I think looking at people that have done it, the big, so-called PE funds, or your institutional investor, and also people like myself, developers in the West Midlands, have done the same thing I want to do, and just kind of seeing what's worked and what hasn't worked. But as I said, for me, it's a passion, first of all.
And I guess the other side of it is then also, whilst there's a lot that you can buy in from the development and the build side, there's also, you touched on it, there's a lot of compliance issues around raising funds. How did you make sure that you kind of covered yourself, that when you are starting, you stop talking about maybe people saying, I want to give you 50,000, 100,000. Now they're talking about, the multiple millions. How did you sort of make sure you ticked all your boxes, and from a compliance standpoint?
So I think before I actually went to start to raise, I started to understand how best, different countries have different regs. Here we have the FCA, in Singapore it's MSA. What we decided to do, me personally, I started to work with agencies that do all those due diligence for you, like the AML, KYC, etc. And I happened to work for an investment bank, Deutsche Bank at the time. And the Apex region was something I was kind of looking at the time. So I kind of had some background knowledge, but not raising money, but obviously just as a consultant. So I think what I did was to work with agencies, the agencies that can do the checks for you. All you're doing is outsourcing the service for them, and they do all the checks to kind of make sure everything does, work out for you, source of funds, all of that stuff. And then all the paperwork that comes with the raise, they do that for you. So many agencies out there that can do that for you.
Because I think one thing a lot of people do, and this is even on a more local level, they raise funds, like they rush to raise funds, whether it be from friends or family, or just, they might raise online or through just networking events. And I've seen it. And then they go to auction because they've raised these funds. They go to auction, they've committed, they've exchanged, only for their solicitor to say, okay, well, I know you've given me your proof of funds, but we still need it from your investor because we can see the money's, come into your account very recently. So I think for those that are looking to raise and are raising funds, just make sure you've done all of the necessary checks that mean you can proceed, because if you are going to be using a principal lender, them and their solicitor is also going to want to do the due diligence on wherever your money's come from. I guess I wanted to talk about the actual asset class as well that you work within, primarily around the co-living space for young professionals. See, because you're doing effectively build to rent.
Correct.
With interest rates increasing, what does that look like in terms of your exits? What's your loan to values on your schemes as you exit?
So I'll start with loan to value. It's very tight. You're looking at anything from, in some cases, 40%. 40%. Yes, so you have a lot stuck in.
Yeah.
Between 40 and 60 LTV. Now, in terms of the exit, so I always start from the exit. So typically these sites, we would sell them to an individual that wants a multi-block. In fact, we're in Shanghai in a couple of weeks. That's what we're selling. We're selling the exit. So we've got the planning. So we're selling, and I think it's more like a trophy asset for some of them, or maybe wealth retention, not necessarily income, but to know they've got something of that size here in the UK. So we work backwards. We have a small office in Singapore and also Hong Kong. So we tend to market these schemes even before we start building, even whilst in planning, and we try to get people to commit to them. The other way we do it is we hold it for a while, stabilize the assets we're looking long
18
term.
months? How long was your stabilization?
Yeah, it's about
process
18 to 24 months.
Okay.
And then you have that sort of track record to stabilize with an operator, and then you can start to obviously sell it. But in some cases, I would retain.
Do you like to retain those? Because I think there's a lot of conversations around, obviously, the co-living space that sort of, because they work so well when they're brand new, because you mentioned obviously the people come out of university, they're used to a certain standard of university accommodation, and because also their bills are being paid for, they're not as considerate with their funds. They often stay in like really nice places. But do you find like the value of those assets remain over time, or what's your experience been like in terms of schemes you finished to how they look now?
I think the values will always be there because again, I don't know about, well, it's not similar to London, but if you look at places like Manchester, Brighton, Leeds, Birmingham, we're starting to find the city centre core is expanding. And we're starting to find, your typical single-lets are becoming more expensive. So places like the co-living scheme for professionals are increasing in value. And if there's anything, they're going to go up. So we're starting to find those values are there, and they'll keep increasing at a very, very rapid pace. Like I said, it's a younger population. The city has so much going for it. We're starting to see infrastructure come in. So the values always be there, and we're standing the test of time. Because again, if you notice the way people are starting to live their lives, accommodation space is getting smaller and smaller. So I think those values will always be there.
Okay, and then I think it's interesting as well that whilst you're still raising, in the Far East, you're also that's also your exit model as well, because you can then build out these schemes that, people just want to find a way to park their capital that's going to give them a good yield, and you can offer it to them on a yield basis. Typically, with these types of schemes, what yield are you generally seeing?
So it's between 8 to 12%.
Okay,
it's a nice range. So it's not too bad. It's
yes, I mean, and comparatively speaking, if based on what rates are, over in these economies, it's a way better return than they'd be getting, in-house. So it makes a lot of sense for them.
No, 100%. Not just even just a yield. The fact that, in those markets I talked about, specifically Singapore and Hong Kong, everything is in English. So they're like the UK. Historically, the UK had some influence in those markets. So the fact that the yields are attractive, the law is in English, it kind of helps the fact that, they can read the contracts in English. The yield is obviously attractive. And, it's a really, really good place for them to do business. And a lot of them do trade here. They have different interests in the UK.
Culturally wise, what's as a black man going out there to do business, how's that been?
I was hoping you asked me that question. One of my biggest clients out there, he said to me once,
thank you to those of you who have liked, shared, commented, but most importantly, subscribed to the channel. Did you know only 28% of people that regularly watch my videos have subscribed? Now we're trying to get that to 40% so we can bring on bigger and better guests and make better content for you. So if you could do that right now, myself and my team would really appreciate it. Now back to the video.
I don't care if the cat is white or black, as long as it catches mice. And it's typical of people at that level. They don't see color. They just look at what you can deliver for them. And I think that's a very good thing, because again, going to these markets, it's kind of changed my perception because I don't know if you see on my social at the time I was doing my fundraise, capital calling, just in March and May. I was a black person and we had 100, Singaporeans in the room, and somebody WhatsApp me straight away. How did you get there? So for me, it's just down to value and what you can offer. As I said, if you can deliver value, people don't really care at that level. They just want to know how could you make money, save money.
It's about your ability to deliver as opposed 100%. To what you look like. Have you learned any of the languages?
Yes.
A little bit? No, you got to give us. You can't just say yes because anyway, I can say yes as well.
So obviously, as you know, we're going to Shanghai in a couple of weeks, and typically a lot of Singaporeans are fourth, third, even fifth generation Chinese. So over the years, I've had to, and also going to Hong Kong, I've had to kind of learn how to talk. So had to kind of speak Mandarin. Okay. So, and I've done a video. In fact, I did a video in socials talking in Mandarin, just introducing myself. So
okay, it's funny. I have a friend of ours, a friend of mine, and my architects. He's just great at picking up languages, and sort of I think 2018 he went and set up a warehouse over there, like recycling clothes from the UK. Was there for like 4 months and ended up speaking fluent Mandarin. Yeah. And then we've got some Chinese tradespeople. So I just remember being one day in Selco, and I'm there with him and the Chinese build team, and then we're just all sort of talking. Then randomly he just turns to him and starts talking to me in Mandarin. When you say that, I was just listening because I'm used to this. I've looked up and the whole shop floor has just sort of closed. They're looking at this black guy like, what's happening here?
I know. So the one thing I'll say is 大家好，我来自英国，我叫 Kai. Oh. So it's just, hi everyone, I'm Kai, blah, blah, blah. And, and I can obviously talk about what you're eating. Thank you very much. Because doing business there is very cultural. And I get that with the person you just talks about. Because some of my staff I just hired, he's a black person and he's out there in Shanghai. And I think that's the icebreaker because you're different. When you're in those rooms, people want to talk to you. It's like, what are you doing here? Because you look different. And the fact you can deliver and you have a track record of delivering, it puts you in a different light because people are just wondering, how did you get here? Yeah. And your story, again, is so important, how you got there. And I think it kind of gets you into those rooms. First of all, you've got value, but again, the fact you look different.
Yeah. But then you've gone out of your way to learn the language, or culturally people appreciate that, this is someone that hasn't just turned up just because, he's actually turned up to be part of the whole ecosystem and culture.
No, absolutely. Yeah, definitely. Because again, it'll still come down to what could you do. And I'll tell you a funny story, because doing business out there is so different. When you do business in Asia, typically Hong Kong, China, and Singapore, it's over a meal. You don't see in an office. And the thing is, so Kaz, like say I was going to go with you because you're with me and with my clients, they feed you first. They give you the biggest portion. So it's not how we sort of dine in the UK, like you have your meal. They kind of, they're
going to cater to you sort of thing.
Correct, but they bring everything.
Yeah.
And they give you the biggest portion. So if you eat it too quickly, they think they haven't fed you enough. And if you don't eat too much, they feel you don't like it. So I kind of shot myself in the foot. I had 4 meetings in a day. And to my surprise, there were 4 dinners. And they bring you the biggest portion. Kaz, I'm not even lying to you. I had to find room in my belly that I didn't even have. So, and when you eat and dine with them, it kind of breaks the ice. Everyone's more relaxed. You can talk about terms. And the funny story is my first transaction, because when they're sold, they're quiet. They don't speak. They don't say yes or anything. They're quiet. They just start looking at you. You're reserved, yeah. And I'm like trying to sell. I was still trying to sell. And then my colleague, I was stays out in Singapore, kicked me on the foot and said, mate, just relax. They're sold.
Yeah.
So when they're quiet, it means they're sold. They're happy. There's nothing to discuss. The business is concluded. So that was a big learning for me.
Yeah, and I think it's really important to be able to adapt to the situation that you're in, regardless across the board, whether it's just being in a different room in the UK, understanding that there's going to be certain just nuances between operating in London and Birmingham in terms of just speed in the way certain things are done, or time, or communication. I think being able to read a room and listening is probably one of the most important skill sets that I've learned just as an entrepreneur over the years. Just mentioned London. No intention to venture south at all?
Too far looks to London, but I'll say because obviously I was born in Birmingham, my passion is there. I feel, and it's this the reason why I feel Birmingham could turn the tide. You know, we're classed as second city, but it doesn't feel like the second city. I feel like we're way behind. I've looked in London, but I felt my passion, loyalty lies in Birmingham. Don't get me wrong, if there's money to be made, why not? We'll come down here. But I feel we've got that, we're on momentum now. We are starting to turn the tide. I'm talking about the city as a whole. There's a big impetus within the city, big infrastructure like HS2. You know, you have clubs like Villa, Birmingham City.
I just feel like, for me, like when I go to Birmingham, I look at it and I say like, it always feels like it's on the cusp of doing something, but it's like waiting to happen.
100%.
So it's like when you go down to like I can't remember, it's like the jury court or something, you see so many cranes and scaffolding, but at the same time, there's still like so many derelict buildings and opportunities where it's like a mixed match of stuff bubbling, but just not fully coming to the boil, if that makes sense.
No, 100%. Even parking developments and strategically, Birmingham is in the middle. So historically, a lot of trade from north to south came through the Midlands. The canal, the heart of the canal system across the country was in Birmingham. So not just...
I learned that from Peaky Blinders.
Yeah, there you go. So, you know, not just development, and I hear you. So for me, that's my passion. I feel like there's so much the city's giving me and I want to give back, you know, make it look nice, you know, be proud to be from the Birmingham region and to create jobs. If you notice now, Birmingham last year, for the last 2 or 3 years, we've attracted the most investments outside London, you know, foreign direct investment coming in, and just testament to the leadership now and the fact, you know, we're starting to turn the tide, because historically we were industrial region, but that's changing now to attracting services like, you know, your HSBC, TVLA, BT, PwC, and lots of
big
them.
business opening.
Big businesses. So again, we are starting to re-energize those sectors within the West Midlands. So again, where you have jobs, where you have value, where you have students, we retain about 40% of 80,000 students, or actually 50% of 80,000 students year on year that come to study. We retain those talents. So all those put together, it's a recipe for success. And I think it's just a matter of time, but it's just too slow for my liking.
Yeah, I think that is. I mean, it's obviously good to see people like yourself, Anthony Laville, that are moving the envelope, particularly as sort of younger generation, like Black and ethnic minority developers. How do you like see things, like particularly with somebody like Anthony, who you're friends with, but at the same time, are you not competing for the same sites?
There's plenty for everyone. In fact, me and him have been talking about how we can do more. There's so much out. There's so many opportunities out there, and I think it's part of the passion he has for the region. So I think what kind of really aligns with our values and our vision for the region. We like when we come down here, we feel like, you know, we can make it, if not better, but in its own way. So we see each other as colleagues, but at the same time, it's just about making sure we support each other's vision, and our paths will definitely cross at some time.
I'm sure. I'll be waiting for the blend, the collaboration that will I'm sure come between Trinity and Volume Property at some point. For you now, like obviously you said, we've spoken about scaling from raising 200K to raising 20 million, which is like, you know, 100x. Where can you see it going in terms of volume?
So again, I feel like it's about finding the right sites and the right opportunities. So now what we're doing is
this is your time to tell them, look into that camera right there and tell them what sites you're looking for and tell them where to reach you.
So particularly, I think what really interests us is the co-living sites. We like them because, again, we feel that's so sustainable to the long term. It's what our clients like. Also, we're looking to start to provide debt finance. So again, we're not greedy. I think typically we will waive out all the fees that you can pay, like the 1%, 2%. It's just straight debt. And deploying that capital, obviously we go through it on the writing process. We get the money from Singapore, which is easier in comparison to the UK. And what that means is the money can come to the UK in 10 minutes. So we're looking to obviously structure all the licensing. We're doing everything out there. So again, it's via vehicle within the UK. I thought it was going to be easy to get it set up because the structure is slightly different, because we're raising the money at, X amount percent, which is cheaper than the UK. So there's room to kind of be competitive within this region.
And are you setting up as like a bond, or how are you raising it out there as
So a PE fund, so private equity fund.
okay.
So that fund specifically is to provide debt. So we're working closely. I don't know if I mentioned this to you, but I went on a private equity course in the UK in Imperial College, and at the time, there were many private equity companies that came on that course. So thankfully, I met two guys from Singapore, and they just started the fund. So we're working closely with them. So we're structuring the fund. We're trying to obviously get the commission, the licensing, and everything, whereby we can deploy that capital from Singapore to the UK.
That'll be amazing. So you're going to have your fund, and then you're then going to be able to effectively be able to deploy that. Obviously, still at a relatively good rate in comparison to what's going on, but still with enough to leave enough meat on the bone for it to make sense for you
100%.
and make sense to those that obviously you're raising from directly. So I think it's a win-win all the way around. So you're looking to kind of diversify outside of solely the development, but also into lending effectively as well.
That is correct, because again, a lot of people like you and I, that the cost of capital is absolutely shocking, raising from the UK. But again, it just reflects the market.
You got to hurry up. When you say this in a podcast, now you're gonna have people at your door like, "Listen, Kai, I heard you've got money. I've got schemes." So it's a win-win.
Definitely, but we have to be the structure has to be correct. So we want to get everything right from the start. It has to be sustainable. I think the underwriting is key, is to make sure we have less defaults and distressed debt.
Yeah, I think it's good. I think, look, when people are setting up, lending, they need to understand what type of lender they want to be.
100%.
Because you've got a lot of lenders, now that actually, I'm not going to mention them because they're not sponsoring me, but when they do, you know what I mean? But however, there's a lot of lenders that pride themselves on not having to repossess, because they do the correct due diligence and only take on, loans where they think it can be a successful development. Obviously, things can always happen, but lenders that pride themselves on opportunities that are going to make sense for both parties for the long term.
No, that's so true, because again, we get offered sites, distressed debt, receivership, and I don't know about you, but we're seeing quite a lot of those where sites were not in construction, been built, and all of a sudden they've gone into administration. We're finding, and it's that time.
Yeah, I think it is. I think also lenders that typically had higher risk tolerances, and now just pulling the plug. They're saying, look, we're not rebridging.
Correct.
We're not happy to offer you further terms. And people with money now, like I know people with money, like private money, that are saying, look, if you want me to get you out of a hole on this scheme, I want 25% per annum.
Yeah,
because that's it. That you sort of take it or leave it money.
Absolutely. So back to the point you raised again, is that down to the writing, making sure all the checks. But one thing I'll say is, I think I've seen people in that position, and it's not pretty at all. So again, it's just trying to be different, making sure first of all, the person that we were raising for, the value has to be aligned. It has to be the right scheme. But again, when it's all said and done, you want to protect the interests of the fund and also the investors, basically.
No, of course. I mean, you've spoken a lot about having a real passion for Birmingham. That's like a lot of your driver in terms of, sort of moving the needle slightly within the city. But for you personally, what do you enjoy about being a property developer and investor?
I think for me, it's many things. But if I was going to put it down to one thing, I feel it's my calling. I feel I've been born to do this, to help improve society. Walking past, even when I come here, I can see people have, okay, let me take a step back. So for me, besides being my passion, my calling, I feel it's what a building does. Builders get jobs. Finance can lend. People can then, your professionals can have a job. You have the solicitors, you have all the trades, you have the utility providers, you have people have a nice place to stay, they can get a job. It's just a knock-on effect development has across society, across multiple sectors. And being a person to help kickstart the knock-on effect, it's amazing. It's an amazing feeling to drive past sites that I'm working on, sites that I've delivered, and to see the amount of people. If you look at the value chain, the amount of people the life have been improved as a result.
How does it make you feel then with the rep that landlords and developers get in the media, bearing in mind that you see it as a very positive calling?
I think it's unfair. I think there's been a lot of bashing of developers and landlords, especially in the last few weeks. And that's what really gets me upset, because I talk to a lot of the MPs in my region, and the biggest problem for them is housing. So when we see when we see that on the media and the rhetoric of developers are greedy, don't get me wrong, there's some really bad ones out there. But if you look at the value we could add to society, it's so compelling. In Singapore, they're like superstars because they know how much housing it's a bit of an issue, because again, it's a very small country, so housing is quite big out there. And I feel like in the UK, we don't sing our praises for developers, because you know it's hard. You're a developer yourself, so it's super hard. So that's just my view. But I'm always on the case of my MPs to help push and change the norm. I mean, podcasts like this, I'm sure people can see the value we bring to society.
Do you see yourself getting into politics?
100%. Well, yes and no.
No, because I can see it already. I could mad see that you're gonna get into politics.
I think when it's all said and done for me, I feel the biggest calling is to serve your country. And I feel you can do it in 3 ways. You can do charitable causes, you could run for office, or just, be a donor for one of just for society. So you never know.
If you were, like, again, I'm not going to hold you to this, but in terms of, some sort of political change you could make, if you were looking at something that you think would have a massive impact, probably on the housing sector, what's something that you think would be beneficial?
I think it's the policies. So I think the policies is everything. Investors look at policies, irrespective of bipartisan, if you're for the left or the right. So it's just down to the policies. I think helping provide like a compelling case, working with people like yourselves, people in the industry, to help influence policy. Obviously, I talked about the 4 ways you can add value. Planning is a big one, and I cut across different strategies. So again, also the tax release and incentives for people like us. So again, this is why I say to my MPs all the time about, I feel like they're not doing enough to be able to reform just the housing policies.
I think definitely, like, planning policy is very slow. It's very archaic. The conveyancing process as well, to actually, you said you come from a space maybe with your investors that are used to things happening quite quickly.
Yes.
And then they turn around, you're like, well, actually, we've still got to wait for this land registry document that we're trying to expedite, but still might take anywhere from 2 weeks to 8 weeks, depending on just how quickly things happen. I think it's something that every time I speak to a developer, whether it's, when I say developer, just an investor, and even someone's buying their first house finds it frustrating, all the way up to developers doing, 100 million unit schemes. They're finding it equally frustrating.
Yeah. You don't even get me started. I started as a property developer with so much hair, but now I lost it all. It just shows how broken the system is, and I feel for the people that need housing. If it's from a social perspective, or maybe it's the private, it just shows we're not building enough, and the policies. No, I mean, I remember going into this, seeing the problems, but again, when I started, the higher I'm scaling, how genuinely broken the system is. On smaller schemes, yes, you see it, but on the bigger ones, you see it because it costs you money. Where you have to go into committee, you have to try and, I won't use the word lobby, but fight your corner to say, can you not see the value I'm doing? You don't even have to take that risk, but you are taking that risk. So, it's a shame. But again, what do we do with developers? We just have to keep fighting and doing the best we can do.
Exactly that. Before we let you go, final question, because obviously a lot of people on here are maybe starting out, they're aspiring to be where you are at some point. What's like one takeaway piece of advice you could give to an aspiring property developer or an investor?
So if I was going to look back and sum in 2 things I would suggest to do, get good at finding really good deals. Be it using the sourcer, be it, finding deals yourself. Get really good at finding really good deals, and get good at raising money. Because I feel with those 2 things, everything else will take care of itself, irrespective of small, big, medium size or massive developments. I feel if you can focus on raising money and finding really good deals, you can do anything.
Exactly that. And if you do find really good deals, particularly in the West Midlands, make sure they reach out to you, because obviously you've got funds there ready, to use, so they can get in touch with you. And people do want to find you. How can they get in touch with you?
So I'm very quiet on socials. I
Yeah.
tend to just focus on work and do my bits. But again, I'm starting to try to get more active. Again, you can reach me on socials. I'm on IG. It's my full name, Kayode Ogunbanjo. You can find me on there. LinkedIn's not a good way to find me. I'm always on LinkedIn. And yeah, just drop me a note and happy to connect and see what we could do.
No, amazing. Well, congratulations on all your success thus far. We're excited to see what's coming next year with the fund. Obviously, I may be knocking on your door for some lending as well. And I'm sure a lot of other people are going to really enjoy this episode and connecting with you. If you haven't already, make sure you subscribe. We're going to be back next week with another episode of the PBK podcast. Peace.